Hi, I'm Jeff Lovell, a staff accountant with AA Accounting, and today we're going to talk about how to avoid or reduce IRS penalties related to filing and paying your taxes late. The failure to pay your taxes on time penalty is 1/2 of 1% of the balance due per month, which caps out at 25% of your tax bill. The failure to file penalty is 10 times higher, 5% of your balance due per month, and that's capped at 25% as well. The failure to make estimated tax payment penalty is 3% of your balance due per quarter that's prorated daily based on a worksheet. If you're more than 2 months late, the minimum penalty is set at a minimum of $135 or 100% of your tax bill if your bill is under $135. Let's work through an example. Sean's busy. He forgets to file his 2015 tax return. He doesn't bother to get an extension. And then later, he files in April of 2017, a year late. He pays his tax bill at that time, $2,000. He will receive a bill from the IRS for $500. That's for the combined penalty, failure to file on time, failure to pay on time. That's 25% of the $2,000. If he'd paid his taxes on time, but filed the return late, his penalty would still be $500. But if he filed his return on time and paid a year late, his penalty would be $120. That's 1/2 of 1% times 12 months times $2,000. So it is always better to file the return on time, even if you can't pay the bill. Your penalties will be lower. So how do you avoid the penalties in the first place? To avoid the failure to pay, you need to pay your taxes by the due date of your return, April 15th, or you need to pay at least 90% of whatever your balance due is going to be through estimated tax payments, and pay the remainder on October 15th if you get an extension. To avoid the failure to file penalty, you need to file on time, either April 15th or October 15th if you get an extension. And to avoid the failure to make estimated tax payment penalty, you need to make 4 quarterly payments that total up to at least 100% of whatever your tax bill was last year, or 90% of whatever your current bill is, so that when you get to your tax return, you owe 10% or less of your bill. Farmers and active duty military get some additional tax perks. You're a farmer if at least 2/3 of your income comes from either farming or fishing. For farmers, you can avoid the penalty if you pay 2/3 of your bill on time rather than the 90% everybody else has to pay in. You can make all your estimated tax payments in one lump sum by January 15th of the following year, or you can make no estimated payments and just pay all your tax and file your return by March 1st. If you do any of those things, you avoid the penalties. If you're in the military and you're on active duty outside the United States, you get an automatic 2-month extension of time to file. And if you're deployed in a combat zone, you get an additional 6 months from the date when either you return from combat or you're released from hospitalization. And that is an extension of both time to file the return and to pay. And you get that by attaching a statement to your return. At AA Accounting, we offer as a free service to our clients a mid-year tax review. We can help you estimate what your tax bill will be for next year and to set up estimated tax payments if you need to make them or to change your withholding. This is a free service for clients and it saves you money on penalties. We're here year-round to assist you. Call us today to set up an appointment to discuss your tax situation. We can help.